And today we are going to be talking about are small business loans hard to get? And I love this topic. Part of the reason I love this topic so much is because it plays very well into exactly what we have going on this week, which is the Funding 30 Challenge. Now, look, if you are not in the Funding 30 Challenge, and I know you're not, or you would be over there watching the live streams there. But if you're not a part of it, get into the group. There's still plenty of time. We're going to have the videos, all the speakers, all the resources are going to be available until Monday. You can check it out at funding30challenge.com. I'll put the link in the bio or in the chat here. So funding30challenge.com. Come join us. It's a blast. It's completely free. We've got over 20 speakers. Today we're talking about grants, equipment funding, all sorts of cool things. So if you're looking for money for your business, this is the place to be. As I see you guys starting to hop on, say hi, tell me where you're at. We'd love to hear from you. And if you have any questions while we're going through this presentation, just let me know and I'd be happy to answer them for you. So let's dive in. Let's talk about, are small business loans hard to get? The quick and easy answer is very simple. It's a yes. It's a resounding yes. They are a lot more difficult than it's going to be more difficult than any personal loans you get because you've got layers of information that you're going through. But what we're going to do is we're going to start to clean this up for you, make it easy. Steve, what's up with you? It's good to see you on here. Tavonda, good afternoon to you as well. You're in Houston, Texas. Love Houston. It's beautiful out there. It's great. Pam from Arlington, Texas. How you doing today, Pam? Great to see you. Thanks for joining me. So let's jump in. Are small business loans hard to get for your business? Anyone who has ever applied for a small business loan, you know it's not a walk in the park. It's a completely different animal. It's a completely different process. There's a lot of red tape that you're going to be jumping through when you're getting a loan for your business, and it's going to have stricter qualifications. Karen actually, or Kareen, sorry, I'm terrible with pronouncing names on social media. This is actually a great point right here. Business loans are nearly impossible to get unless you make over $10,000. That's kind of there. You have a really great point there, but one of the things to keep in mind is that a lot of traditional business loans, yes, but there's a lot of options that are available just based off of credit, or if you have collateral available. There's a lot of different options, and that's part of what we're going to get into is helping you know what's going on and how to work with it. But anytime you're looking at trying to get a small business loan, they're going to have more strict qualifications, and it's going to take more to actually get through that. And a lot of business loans that you're going to look at are going to want to see that you've got good personal credit as well. And as much as we want to try to divide personal and business finances and credit, that still is a factor. And I think we talked about on Tuesday, actually, we were talking about some of the different reasons why. And, part of the reason that banks want to see that you have good credit is they believe, and historically, what they're looking at is they're saying, look, if a business owner has good credit, has good financial standing, they're a lot more likely to make good, sound decisions, more long-term decisions, more for the overall growth of the business, opposed to somebody who may be in financial trouble, tends to make knee-jerk reactions. So that personal credit is one of the things to take into consideration. But to offset, if you are dealing with personal credit issues, because let's face it, entrepreneurs, we're crazy. We're going to get out there and we're going to make choices based off of opportunities, not necessarily what's always best for our credit. But you can offset that with business credit, which is why we love business credit at Credit Suite so much. When you can build business credit, a lot of times it can offset any of the issues that you may have personally with your personal credit. So, the other thing they're going to be looking for is established business with strong revenues. Karen just mentioned that. Again, sorry about the name if I mispronounce it. Established businesses, strong revenue. A lot of the financing you're going to be looking for, they're going to want to start about that $10,000 mark. That's the minimum if they're taking cash flow into consideration. But let's jump into it. Even if you have all this stuff, you may still struggle to get a traditional business loan. And when we talk about traditional business loans, That's going to include loans like SBA. If you walked into Bank of America and went to their commercial financing department, it's going to be more of what you consider a bank loan. That's what we consider the traditional business loans. Many factors affect the approval that you may not even realize. But to make it easier to get approvals, take care of these things before you apply. And this is going to fall under our fundability. So with the fundability, it's gonna help you avoid being denied due to some of the minutia, some of the details, some of the small things. And so what that's going to include, and we've got a ton of resources on this. You can check out our YouTube channel. If you're watching on YouTube, if you're on Facebook, we have tons of information on this. But part of what they're looking for with the fundability, and when you start looking at well, before let's jump into the fundability a little bit. As much as we talk about fundability, I think it's important for you. I think it's important for us to understand that the reason that fundability plays such a key factor into financing a business is pretty simple. With the fundable foundation and making sure that your fundability foundation is intact, it eliminates the appearance of risk. And so when we talk about that, banks want to make sure that they're not being defrauded. They want to make sure that they're not that they're working with a legitimate business. And so these are the indicators that banks and lenders are looking at to determine if you're credible, if you're a viable business. So some of these are going to include your business needs its own phone number. 800 numbers are best, toll free, anything along those lines. And then you want it listed in 411. You want to make sure, and the 411 directory, that it's something that we keep going over. It's starting to become less and less of an issue, especially like we saw this over the pandemic with lockdowns. Once businesses started working remotely and a lot of the newer startup businesses started working from home, the 411 directory just really, it's starting to become less obsolete, but it is a factor that some take into consideration. Plus, it just helps with your SEO and your search engine optimization when people are looking for you. Make sure your business address is a physical address where you can receive mail. PO boxes are great, they're convenient, they're easy to use, but an actual physical address is what lenders are going to be looking for, because when you're dealing in hundreds of thousands or millions of dollars in business loans, they want to know where they can find you. It's really that simple. So having that physical address where you can receive mail is going to be something that they're going to take into consideration. No PO boxes or UPS boxes. Virtual address is okay, but some lenders will not accept them. So just keep that in mind. When you're applying, you may be required to put your actual home address in there. Get an EIN number, which you should do. That's use it on your loan application. Your EIN number is basically just your social security number for your business. It's how the government identifies you. It's the EIN is technically your employer identification number, which is why it's so critical. Incorporate. Make sure that you've got a business set up. One of the most startling realizations that I had about this is that when you start applying for SBA loans, they don't even consider you a real business if you're a sole proprietorship. They consider you as an experiment at that point. So at least have an LLC. At least you need an LLC. If you're ready to make the change, or you talk with your CPA or attorney, you could also look at S corps or C corps. Those all have different functions. They all have different pros and cons for each of them. So that's something that you're going to want to talk with your team and your network of professionals to figure out what's going to be the best route for you. Having a separate business bank account goes a long way. That's going to be a big part of making sure that you're fundable. Banks don't want to loan to people that are just shoving their business money into their personal accounts. Make sure you have all the necessary licenses to operate legally. Just having that is a verification. It shows that you're following the rules. It shows that you're a legitimate business in the industry out there working legally along with the state and local representatives. And you need to have a professional business website. Make sure that it's hosted in a good place. Don't get out there with I love credit.wex.com, or .webbuilder.com. Make sure you've got your domain name. And then with that, set up your email with it as well. So your business email your business email address should be the same as your domain name or your business website. Again, we're creditsuite.com. Our email address is info@creditsuite.com. All of our emails are at creditsuite.com. It makes it really easy, really convenient, shows consistency, and it proves that you're a fundable business. And not only that, even outside of banks, let's be honest, when was the last time that you bought a high ticket item from somebody that was at gmail.com? And they're representing themselves as a business, but then you get in there and it's like the big long name of Keith's favorite business credit services at gmail.com. Nobody likes that. It loses trust with your audience. It's not even a strategic thing from a marketing side. So make sure you got your domain, make sure you got your email address, and that your business looks legit, that it's solid, and it's what lenders and your clients are going to be looking for. Now, let's talk about some ways that we can that you can reduce lenders' risk. These are going to be ways to make you look pretty for the banks. That's really what we're going to do. We're going to talk about let's talk about some collateral options and personal guarantees. Um, Collateral will always make it easier makes it easier getting a business loan. Collateral can be a lot of different things. Collateral can include stocks, bonds, mutual funds, IRAs. It can include real estate. It can be equipment that you have, equity that you have in other businesses. There's a lot of different things that count as collateral. Really, what they're looking for is what kind of assets do you, as the business owner and the business itself, have available, so that if they loan you $1 million, if things go sideways, do you have the ability to repay that money? Collateral goes a long way with that. It shows that you're not just living off of operating cash. It shows that the business has assets, that you've got assets, that if you need to liquidate, if you need to consolidate, you absolutely can easily and keep things moving forward and eliminate the risk of the bank. A personal guarantee will for sure improve your approval chances. One of the weirdest, or not weirdest, but it was kind of a knee jerk. I have a friend who's a banker at a local bank here in the Kansas City area. And he said this to me, and it really, he said it so nonchalantly that it really resonated with me, of understanding this is their mentality. And what he said is he said, look, if you're not willing to sign for your business, why should I be? And that mindset and that mentality just really helped me to understand what banks are looking for. Their mindset is, if you're not willing to take on the risk, if you don't believe in your business enough to put your signature on it, why should a bank? And that's the mindset of the banks. I'm not saying it's right, wrong, or indifferent. I'm helping you to understand how banks think, how banks operate, what their mindset is. So as you're going through this process, you can be prepared for it. Personal guarantee goes a long way. Again, bank's number one job, to eliminate their risk, to mitigate their risk, to make it where they're making money by giving you loans, but they're not in a position that they can be losing money from it. Most traditional lenders are going to require it anyway. They want to make sure that you, as the business owner, are solvent. They want to make sure that there's no hidden skeletons in your closet, that there's nothing that's out there that could potentially come back and impact the business or impact you as the individual and get you to the point where you're making not so smart business decisions with it. The next way to mitigate your risk: establish and grow strong business credit. Get your DUNS number. Focus on getting accounts that report to the business name, that report to business credit reporting agencies. Whether you're going for traditional lending, alternative lending, insurance, if you're looking at becoming a vendor, if you're looking at offering services inside of or not services, but your products inside of a retail store. Anytime there's an exchange of money with a bank or a lender of any sort, they're always checking your business credit report. Whether you realize it or not, whether the loan officer even realizes it. I was in mortgage lending for years and loved the industry. It was awesome. But what I would tell my clients and what I would use for a pre-approval was only scratching the surface of the reporting that the bank was actually looking at. So, for example, we may look at TransUnion, Experian, and Equifax to approve somebody for a personal mortgage. But then the underwriters would go through and look at LexisNexis, check systems, all these other different um, credit bureaus and credit reports. And it's the same thing on the business credit side. They may not, the lenders may not, the loan officer or the representative that you're working with may not come out and tell you, yeah, we're going to look at your business credit reports, but they're always being used. They're constantly being used. So you want to make sure that your business credit's good, that it's established, that you've got some reporting accounts on there, that you've got a legitimate way as a third-party verification as proof that you pay your bills. All right, so let's jump into some of the nitty-gritty. Let's talk about choosing the right lender and the right loan, because I think this is where a lot of us get frustrated in the process. There's a lot of different types of loans, and there's just as many different types of lenders. Michael, you asked, how can I get funded? That's a great question. Let's see if we can answer that, and if not, let's see if we can get you on a call to talk with a representative to see how we can help you out with that. So there's many different types of loans, many different types of lenders. You've got your traditional loans like SBA, bank loans, but then you've got alternative financing. And alternative financing really leans on the 3 C's. You've got cash, credit, and collateral. With the 3 C's, what they're looking at is, if you have cash flow, you may be able to get approved for alternative financing. If you've got good credit, you can get approved for alternative financing. If you've got collateral, you can get approved for financing. Even if you don't have any of the other C's, if you have just one of those, you can easily be qualified for some of these other lending products that are out there. What you need to do is consider which ones will work with you best for you and your situation. Now, let's have an honest come to Jesus moment here. If you know that you're a startup business, if you know that you're a younger business that's just getting started, you don't have a ton of revenue, you don't have those assets yet, you don't have that cash flow available yet, then that's what we're talking about here. You're not going to want to go to SBA and go, hey, I need a $2 million loan when the business is just freshly established, you hadn't made any sales, you're just putting things together. At that point, you're gonna look at something that's going to be more of a credit-based product, where you have like the credit line hybrid, that if you've got a 680 credit score or better, that you can qualify for up to $150,000 in business loans. So that's what you get. That's what we're talking about when you're considering the best lenders to work with. Figure out what are your strengths. What is it that you have going in your favor? What are the pros of your business right now? If you've got great credit, that's a great way. That's a good start. If you're 100% sure, if you're confident as the business owner that if you can get out there, you can make money with this business idea with the personal guarantee, that's a great time to invest it. But outside of that, you want to protect it on your normal operations, such as business cash flow, business credit side. So consider what options are available. What are your strengths? What is it that you're doing on a daily basis? How can what is it that the business has that a lender is going to look at and go, yeah, we can loan based off of that, and apply for the right loan from the right lender at the right time makes all the difference in the world. There's nothing more frustrating than seeing a lender, hearing, hey, we can do all this cool stuff. You get in there, you talk to them, and then they come back and go, oh, no, we can't. It's frustrating. It wastes your time, it wastes your energy, and it makes it where you may just say, I don't need funding, when really deep down that you do. So again, that's where like the 3 C's come into it. Look at your cash. Do you have good cash flow? Are you doing at least $10,000? Are you doing at least $5,000 a month? What do you really have available in provable cash flow? Do you have good credit? Is credit something that you can use? And then do you have anything that's collateral that you can secure to be able to get the business up and going, get it off the ground? All right, so now that we've talked about that, let's look at some of the loan terms of what lenders are going to be looking at. Traditional loan terms almost always going to have a personal guarantee. Banks just love it. That's what they do. Again, we just covered that. If your personal credit score isn't good, approval is unlikely. Now, there are some caveats in this, and this is something to keep in mind. When you're looking at credit scores aren't always just hey, you have to have X number to be able to get the loan. There are variables inside of that. So let's say you walk into the bank. Normally, you have a 720 credit score. You've got good credit, you've got good payment history. You manage your balance as well. You're just solid. You're solid on the personal credit side. But then an unexpected doctor bill pops up, hits as a collection on your credit report, and then all of a sudden you look at your credit score and now you have a 580. A bank's going to look at that and go, you know what? We have all this history that shows that they're a solid buyer, and then we have this one instance that popped up that's kind of an outlier. It's not a consistent pattern. It's an outlier on who they actually are, on their consistency and their patterns. So scores don't always mean a no, but there's got to be enough. There's got to be a good enough story there to be able to sit down with the banker and go, look, I normally have great credit, got great payment history. I've got a couple collections that popped up unexpectedly. Here's what we're doing about it. That's the kind of stuff that banks want to see. Strong collateral is going to make all the difference in the world when you're looking at traditional lending. A lot of the products that are out there, if you don't have something that can help secure the loan, they're going to pass on it. And a lot of that's going to depend on what you're getting money for as well. If you're trying to buy a building, obviously that building is going to be that collateral as well. So there are compensating factors with that. Traditional term loans, FICO 7. If you have a 720, you're pretty much golden. 720 is the magic mark for just about all lending products everywhere. But again, you can get approved with lower scores. Don't let that hold you back. It's still something that is available if there's something that you can show as an outlier. If you can show that traditionally, as a pattern, you've got great credit. You just had an instance here or there that may have happened. But the terms may be less favorable. There may be pricing adjustments if you're dealing with credit issues or score issues. So just keep that in mind. That is something that you've got to look at. Some of the other terms that they're going to look at, they're going to want to see great business credit. Can encourage a lender to be more flexible. If you know that you're dealing with rough personal credit, or that you've had past issues in the last year or two that you're overcoming, that you're rebuilding out of, that business credit again is one of those compensators. If they look at it and go, you know what, their personal credit's a little thin and maybe lacking, score's not great, but you look over on the business credit side and you've got $100,000 in business credit that you're consistently using. It's showing good utilization, it's showing good use, it's showing that you have all of these accounts that you're consistently using and paying. That goes a long way for alleviating the risk of the personal side. So focus on your business credit, and the way that you do that is actually really simple. Don't just establish business credit for the sake of establishing business credit. While that has some benefit, the real power and the real value of business credit comes into using it as a portfolio, using it as your operating system, taking that credit first mentality that gets you out there, putting everything on credit, paying it off, so that you've got quantifiable proof to the banks from a third party that you're actually able to use your money, that the company's making money, it's able to pay off those debts. All right, let's jump to the next one. Looking at the comments here, Michael, great credit, projected $100,000 a year. Awesome. Michael, it sounds like you got a great business plan. I think that's something we could definitely talk with you about. We got more people tuning in. If you're just joining us, say hi. Let me know if you have any questions while we're going through this. Always happy to help. Tavonda says, what time does Credit Suite for the free business consultation close, please? It's actually on our calendar. If you go to creditsuite.com/consult, I'll put it in the chat for you here. If you go to creditsuite.com/consult, the scheduler's there. It's going to show you exactly what times are available. We're open pretty late. We've got people working on the East Coast all the way to the West Coast and everything in between. So we've got a lot of times that are open that somebody would be available to work with you and help you out with that. All right, let's jump back in here. Your personal credit scores will still weigh heavily on terms and interest rates. Always just keep that in mind. The better your credit, the better terms you're going to get. It goes to an old adage, and I heard somebody at the Funding 30 Challenge mention this yesterday, and it was one of the SBA lenders we were talking about. He's like, you always have to keep in mind, and actually Megan brought this up as well, which was a great quote. You always want to get funding when you don't need it. Because again, if you're trying to go to a bank and go, hey, you know what, I need it, my credits are getting hit, I'm having all these different things that are impacting me, banks are going to look at that. They can see what you're going through at that moment and go, yeah, I'm not really interested, looks a little risky. But get the credit, get funding when you don't need it, so that it's there when you do. Because again, your personal credit's going to play heavy on the interest rates. So just be strategic about it when you're going through it. SBA loans is still a traditional bank loan, but it's guaranteed by the federal government. So what a traditional bank loan maybe not have the appetite or not willing to take on, SBA may actually do that because it's guaranteed. It's guaranteed money, which means that if you go to SBA and you get $1 million loan, 750,000 of that is backed by SBA, meaning that if you default, the bank only takes a $250,000 loss instead of $1 million loss, which is huge. And it's why SBA is such a popular program. It protects the banks and it gives flexibility to small businesses and growing businesses to be able to get funding for that growth. Um, with SBA loans, the Small Business Administration, or SBA, works directly with the lenders. You don't actually go to SBA for the loans. You're still going to go to the banks. Think of it like FHA. An FHA loan, you're not going to FHA to get the financing. FHA is securing that loan. SBA is essentially kind of like FHA for the businesses, for business lending. And SBA is also going to offer options that borrowers may not be able to get based on your own credit history. So it gives you a lot of opportunity. It opens up a lot of different options for you within that. The government guarantees allow lenders to be more flexible with credit score. So SBA, you don't necessarily have to have 720. I've actually met people with in the high 500s who have gotten SBA loans because, again, they're looking at it from an overall standpoint and overall flexibility, overall health of the borrower. So as you're going through the process, as you're getting into SBA loans, the personal credit is going to have some impact, but not as much. And SBA, when you're looking at the SBSS scoring model, is very much going to take your business credit as a weighted factor into this as well. So the government guarantee is going to allow lenders to be more flexible with the credit score requirements. And then the other cool thing, SBA has a microloan. The SBA microloan is possible to get a personal credit score between a 620, 640. That microloan goes up to $50,000. Now, look, the microloan is actually a great option for startups if you don't have revenue coming in. They're going to look for a business plan. They're going to look at your personal credit. They're going to look at the projections of the company. But it's hard to find lenders that will do the microloans. My best advice are credit unions and small community banks. They're really, especially like if you live in a city, if you live in more of a repressed neighborhood, these are economic development loans. They're meant for lower income communities to be able to have access to government funding. That's where the microloan really comes into play. There's a lot of nonprofit organizations that have the microloan available as well. So great tool, great resource. Check that out if that's something that you're interested in. And SBA loan application process is lengthy. It's not short. There's going to be a ton of documentation they're going to look for. There's going to be a ton of paperwork. You're going to jump through a lot of hoops with SBA, but it's worth it. SBA is going to give you these 10, 15, 20, even up to 30-year terms on it. It's going to be cheap rates. It's going to be a small percentage over prime. So as prime's gone up in the past couple of weeks here, we've still got people getting 4%, 5% interest rates on commercial loans with 20-year terms. I mean, just awesome rates, awesome money, awesome fees available for it. SBA is just kind of the cream of the crop when it comes to small business lending, but it's more difficult to get, and that's why we're here today, is because of that. The other option to look at, though, is if SBA is not an option, you know that where your business is at right now, it seems out of reach. Maybe the income requirements, you don't have collateral, maybe you haven't had a chance to establish your business credit. You can start looking at lines of credit, and these could be revolving credit, like business credit cards. Typically, the rates are going to be better on a business credit card than personal credit. You're going to have higher limits all the time, and it's going to have a similar application and approval process to like getting term loans. So line of credit versus I'm going to take a step back here. Lines of credit have better interest rates than credit cards. Credit cards, traditionally, you're going to be looking at 21 to 25% until you start getting into the higher tiers, the more exclusive, like American Express, Discover, Visa, some of the big name brands with that. Once you get into that, you can get some pretty decent interest rates. But lines of credit will traditionally have a percentage over prime. They'll have a set interest rate for a set period of time, and it works like a credit card. It's cheaper money, and this could include companies like Fundbox, Bluevine. Those are different places that offer lines of credit that are available even without tremendous income. So like we yesterday Fundbox was on with us at the Funding 30 challenge, and their requirements are 3 months worth of revenue. They like to see that you're making about $5,000 a month to be able to establish a line of credit for you. If you want more information on that, creditsuite.com/Fundbox. And sorry, my team's all jumped in the Funding 30 challenge over there, so I'm having to type in my own stuff. But you can check that out at creditsuite.com/Fundbox. Some great information there where they'll explain to you what it is. But you can get lines of credit that are good. They don't have crazy personal credit requirements either. And it's going to have a similar application approval process to term loans. They're going to want to see your income. They're going to want to see the structure of the business, all your fundability assets, all of that. Now let's talk about non-traditional lenders, because as we're going through these nasty SBA requirements, you don't get discouraged. There are options. There's a ton of alternative lenders out there that are going to be able to help you out. These are going to be lenders other than traditional banks, other than credit unions. It may be fintech companies. It may be hard money lenders. There's a lot of different options out there. They're going to have more flexibility on the approval requirements. Now, keep in mind, anytime somebody says that you've got flexibility, flexibility always comes at a cost. And what that means is that instead of a 4 or 5% interest rate, you may be looking 7, 8, 9, even up to 12%. So if they're taking a risk on you because they can't verify, or they're not verifying other information, they're making up for that risk in the fees and the interest rates. So the more flexible a financing product is, the more expensive it's going to be. Because again, the more flexible that a loan is, the more riskier it is for the bank, meaning that the lender now has to offset that risk. And that's where higher interest rates, higher fees, things like that start to come into play with it. But they are more flexible, and a lot of times they can be a great stepping stone. When I was in sales with Credit Suite, I met this client. He was awesome, man. Just a sweet guy. He was a truck driver, and he called me. He was practically in tears. He's like, man, look. He's like, I can't drive. I can't make money right now. My truck's sitting in the driveway. I don't have the money that I need to be able to repair it, to be able to get back on the road and start making money. So he was really in a bind. So we started looking at, okay, what are some of the options? He was making great cash flow as a driver. So we put together a cash flow deal for him. The rates were high. The fees were a little bit high, but it was a lot better of an option than him not making money with the business. And so we got him set up, got him the money. 24 48 hours later, he got his truck fixed. Took him about a week to get everything back on track. Talked to him a couple months later, and he already had everything paid off. It cost him a couple $1,000s more than it would have if he just had the money available, but it kept him on the road. It gave him a chance to rebuild. And a lot of times when you're looking at these alternative lenders, it's not the best end-all solution, but it's an amazing stepping stone to be able to get you to that next benchmark in your business, to get you to that place of growth where now you've got the revenue coming in, now you've got the cash flow, you're able to invest in some of the collateral, so that when you're ready to look at the SBA loans, now you can start. Now you've got the assets, you've leveraged some of the alternative lenders' money to be able to get what you need, so that you can get that really good long-term, low interest rate money with SBA or some of the other banks. Looks like we have a question here. How can my company have an ongoing relationship with Credit Suite? Can you elaborate on that? Would love to do that. We actually have an affiliate program. We have a partner program that we can talk to you about. If this is something that you're interested in, we'd love to help you out with it. We'll go back through and comment and get you some information in there. It's a much faster application process with these alternative and non-traditional lenders. So keep that in mind. The application is gonna take less time. It's gonna move quick. Again, sometimes you're gonna have 24 to 48 hours to be able to get the funding that you need with it. With non-traditional and the alternative lenders, you can apply online to get approved in as fast as 24 hours. Funds may be in your account within 24 to 48 hours. And great if personal credit isn't terrible and you need funding quickly. It looks like we have a troll on our YouTube channel. That's okay. We love everybody here. We appreciate your comments and boosting our rankings here. So non-traditional lenders are great if personal credit isn't terrible and you need funding quickly. Good business plan helps all the way, guys. No matter if you're looking at alternative lending, if you're trying to step up into SBA loans, or if you're looking at the micro loan options, a good business plan is going to help move you along in the process. It's going to convince lenders that your business is a good investment, and it's best to hire professional writers and researchers, especially if you're looking at grants. You're looking at some of if you're looking at some of that startup money, if you're looking at the microloans, things like that are going to go a long way for you. And there's plenty of free resources online. We've actually got videos inside of our YouTube channel on writing business plans. They go a long way, and not only that, it really just helps you to look at things and understand what you're dealing with. It helps you to understand how your business is, it helps you give you a game plan on how your business can grow and how things can work. So can business loans can be hard to get. There are ways to make it easier. Building a strong business with fundability is the first step. Starting with the fundability foundation is going to go a long way. And at Credit Suite, we can help you with that. If you want to find out more, schedule a free consultation. During that consultation, what we're going to do is we're going to sit down with you. We're going to do a free business financing assessment, meaning that an account executive is going to sit down. They're going to look at your situation, help you determine what the strengths of your business are, show you what kind of lenders are available to you, whether it's an alternative lender, whether it's traditional, SBA, any of that. We're going to figure out what's going on with your fundability. We're going to guide you through the steps necessary to improve it if it's necessary, and just really be there to help you get the funding that you need, whether it's stepping stone to get you up into the traditional options, or if you're ready for it now, we're going to help prepare you, make sure that you've got all the tools that you need for that. So business loans, yes, they're hard to get. Yes, it's going to take some time, but you can make it easier. Get in contact with us, comment. Looks like I have Keith. Can I call and talk with you today? I'm going to be in the Funding 30 challenge, but it looks like you're on YouTube. Here's a secret: if you message us, that's me that's on the other side chatting with you guys on social media, me and my team. So if you just start a conversation with us, I'd love to chat with you. We could schedule some time to be able to help you out with that. So if you got a lot of value out of this, we'd love for you to share it. We always have fun helping business owners that are just getting started, finding money, whether you're new to the process, whether you've been in this, whether you're in massive growth mode. We're going to be able to sit down with you, share this, use hashtag business credit toolbox. We'll get you some freebies on building your business credit. And again, if you're looking for money, go to funding30challenge.com. We've got the event going on right now. There's still time. There's still speakers coming up. You can still go back and watch the speakers that we've had so far. But it's an awesome event. You're gonna have a great time there. Community is just booming. People are helping each other, sharing advice, sharing tips. I mean, it's a blast. It's always fun. It's a great time. So appreciate you guys hanging out with me today. We'll see you next time. Thanks.